Good morning, I'm Maiki Oreta. From markets to policy, from Manila to the world, we cut through the noise so you can navigate, adapt, and lead. This is Business 360. The Bangko Sentral sees the economy gradually recovering by the second half of 2026 as it moves past the impact of the flood control controversy. Inflation could climb above 3% by mid-year as oil price risks build and global energy costs remain volatile. Cybercrime authorities warn of AI-driven love scams targeting Filipinos this Valentine's season. German automaker BMW recalls hundreds of thousands of vehicles worldwide over a potential fire risk. And the United States pushes for a sharp increase in Venezuela's oil production as global energy supply concerns resurface. The economy is seen regaining momentum this year as business confidence shows early signs of improvement. Speaking at a Management Association of the Philippines event in Taguig City, BSP Governor Eli Remolona Jr. says that confidence is beginning to return and expects the economy to normalize by the second half of 2026. Latest data shows the S&P Global Manufacturing Purchasing Managers Index rising to 52.9 in January from 50.2 in December, signaling expansion in factory activity. The Philippine Stock Exchange Index also climbed to a near 7-month high, closing at 6,498. Now, inflation is beginning to pick up again, but it's expected to remain within target over the next 2 years. The Bangko Sentral ng Pilipinas says headline inflation could hover around its 3% goal after January. Inflation edged up to 2%, its fastest pace in 11 months. The BSP says inflation may move slightly above target from the second to the fourth quarter of this year before settling back near 3% afterward. Full-year inflation is projected to average about 3.2% in 2026 before easing to 3% in 2027. Key drivers include higher global oil prices, potential electricity rate adjustments, and base effects from last year. Despite these pressures, the BSP is confident that inflation will stay within target, signaling policy stability in a still manageable price environment. The Philippine Institute for Development Studies, or PIDS, says the country is not heading toward a debt crisis, with public debt still seen as manageable. PIDS says that the recent surge in debt is less concerning than past episodes. Unlike previous crises driven by high interest rates, excessive external borrowing, or structural fiscal weakness, the latest spike stemmed from pandemic-era shocks, including a sharp drop in growth and a temporary rise in deficits as revenues fell and government spending increased. Data shows that the country's debt-to-GDP ratio jumped after economic activity contracted during the pandemic, breaching the 60% threshold in recent years. Still, PIDS says debt remains on a manageable path, but stresses the need for a credible medium to long-term fiscal consolidation plan to sustain confidence while supporting recovery. Tobacco excise tax collections in the country are declining despite steady smoking rates, raising concerns over lost revenues and the rise of illicit trade. Finance Undersecretary Carlo Adriano says collections fell from 174.6 billion pesos in 2021 to 132.26 billion pesos in 2024. Officials warn illicit tobacco is undermining both government revenues and public health programs. Finance Assistant Secretary Nini Asuncion says every smuggled pack is a direct theft from healthcare funds. The Philippine Tobacco Institute estimates the government lost as much as 172 billion pesos in tobacco taxes from 2020 to 2025, funds that could have supported healthcare, infrastructure, and education. Lawmakers and industry groups are calling for stronger enforcement, including a minimum retail price policy and cross-checking of vape manufacturer registries to curb smuggling and tax evasion. State-run Pag-ibig Fund, the Philippines' national home savings and housing finance agency, saw members set aside a record 160.41 billion pesos in savings in 2025, the highest in its history and a signal of stronger household savings. The total is 21% higher than a year ago, driven mainly by voluntary contributions under the modified Pag-ibig 2 or MP2 savings program. Voluntary savings continue to outpace mandatory contributions, signaling growing member confidence in Pag-ibig's savings and investment programs despite a still uneven economic recovery. Human Settlements and Urban Development Secretary Jose Ramon Aliling, who chairs the Pag-ibig Fund Board, says that the record collections reflect strong trust in the fund and support for its long-term savings programs. For our economy, stronger Pag-ibig savings mean a deeper funding pool for housing loans and property development, key drivers of consumption, construction, and domestic growth in the Philippines. Now, deadly ferry disaster in Basilan is triggering sweeping accountability moves across the country's maritime sector, with potential impact on shipping operations and cargo movement nationwide. The Department of Transportation has ordered the Maritime Industry Authority to file administrative cases against Aleson shipping lines following the sinking of MV Trisha Kirsten 3. Transportation Secretary Giovanni Lopez says initial findings point to possible overloading that may have caused cargo shifts and compromised the vessel's stability. Poor seamanship and multiple safety violations are also being cited. Sanctions are now being pursued not only against the shipping company, but also against government personnel, including Marina and Coast Guard officials, for alleged enforcement lapses. The DOTR says liability could extend to company owners, executives, crew, and regulatory officials as the investigation continues. Tighter safety enforcement could lead to stricter compliance costs and possible disruptions in inter-island shipping and logistics, a critical backbone for trade and supply chains. Now, despite a slight rise in jobless Filipinos in 2025, the Department of Labor and Employment says the Philippine labor market remains stable, a key signal for business and consumption. DOLE says that the full-year unemployment rate stood at 4.2%, or about 2.14 million Filipinos, still within the government's target range. Job losses in the construction sector prompted targeted interventions through short-term employment and livelihood programs such as TUPAD and the DOLE Integrated Livelihood Program. The government is also expanding youth employment initiatives, including GIP, SPES, and Job Start, as part of its goal to keep unemployment within the 4 to 5% range by 2025. Now, a stable job market helps support household spending and consumer demand, critical drivers for economic growth. Now, the Philippines is pushing creative industries and women-led enterprises to the center of ASEAN discussions as it prepares to chair ASEAN this year. Trade Secretary Cristina Roque says that the government wants to expand the region's economic agenda beyond traditional focus areas such as energy, semiconductors, and agriculture by shining a light on Filipino strengths in creative and services-driven sectors. Roque cited South Korea's success in using its creative industry to boost global influence, saying the country can do the same by supporting local artists, designers, and women-led businesses. The strategy signals a broader push to position creative services, digital content, and entrepreneurship as new drivers of trade, tourism, and export growth in the country as the Philippines takes on the ASEAN chairmanship this year. We're taking a quick break. More stories and the context behind them ahead. This is Business 360. Welcome back. The Philippines has fallen to its worst ever ranking in the 2025 Corruption Perceptions Index, dropping 6 spots to 120th out of 182 countries with a score of 32 out of 100. Transparency International says that the lower score reflects public outrage over alleged fake flood control projects and wider concerns over corruption in government contracting. The group warns that weak governance and accountability issues are weighing on investor and consumer confidence and as we see, are slowing economic growth. Analysts from Ateneo de Manila University and the University of the Philippines say political maneuvering and limited accountability have complicated investigations, with the government's Independent Commission for Infrastructure facing challenges in prosecuting responsible parties. Transparency advocates are urging stronger oversight, meaningful reforms, and clear accountability to restore public trust. Corruption rankings are closely watched by global investors as they influence risk perception, capital flows, and the country's competitiveness in attracting investments. Now, Philippine manufacturing is starting 2026 with uneven momentum. Foreign direct investment is still coming in and has already exceeded the central bank's target, but remains below last year's levels, showing investors are very cautious. Bank lending has slowed to its weakest pace in nearly 2 years, and business confidence is still recovering after a year of slower growth, global uncertainty, and governance issues that really shook sentiment. The question now, are companies ready to invest and expand again, or are they still waiting on the sidelines? Joining us now is Beth Lee, the chairperson of the Federation of Philippine Industries. Hi, Beth. Good morning, and thanks for being here with us.
Good morning, Maiki. Pleasure to be here.
Okay, Beth, let's start with this. Can you give us a snapshot of FPI today? How large is your member base, and what are the sectors that you represent in this February 2026?
Yeah, FPI, Federation of Philippine Industries, we have over 100 corporate members and over 30 industry associations as members. And we represent a broad spectrum of sectors that include cement, steel, chemicals, pharma, food and beverages, plastic, textile, vehicles, consumers. So we actually represent a lot of the manufacturers here in the Philippines.
Yeah, this is a broad spectrum of well-established businesses in the country. So, and just let us know, in terms of size, it doesn't really change because these are established businesses and they're in here for the long haul. And what we want now is for them, and correct me if I'm wrong, is to deepen their hold in the country, their operations in the country, rather than attracting new people to come in, because this is not trade, this is not retail, this is heavy industry. What are your thoughts on this, Beth?
Exactly, Mikey. FPI actually represents manufacturers, so it's not really retail where we can get a lot of members to come in when you're in retail. But the important aspect of the FPI really is to deepen industrial growth locally here, and of course also for exports.
Mm-hmm. Okay, across your members right now, what is the dominant mood today? I mean, we just had the story earlier. Let me pull that up. We just had the story earlier. The Philippines getting our worst ever ranking in the Global Corruption Perception Index by Transparency International. We ranked 120 out of 182 countries. This is our worst showing since this index began in 2012. Here it is on the screen right now. And if I could point out some salient points, the Philippines is one of the lowest scorers among the Asia Pacific nations. We're only better than Mongolia, Pakistan, Papua New Guinea, Bangladesh, Cambodia, Myanmar, and North Korea. That's who we beat. But here's where it's kind of interesting. With a score of 32, we're tied with Angola, El Salvador, and Togo. If you don't know where that is, that's a little country in West Africa. What does this tell you, and what does this tell the foreign investors that we want to deepen their base in the country?
If it's any consolation, Thailand is number 33. So Philippines is 32 and Thailand is number 33, if it's any consolation.
Well, there's a big language barrier there. We've got English. We've got that broad base of English speakers. But okay, anyway, go ahead, Beth.
Yeah, but the feeling right now is measured optimism. I mean, if we're going to take a look at the PMI, we have 2 consecutive months of expansion. So in November of last year, we had a large contraction of about 47 on the PMI index. But in December, we expanded over 50. And in January of this year, it actually jumped to 52.9. Now, that's significant because it's the strongest since April of last year. That signifies that manufacturing is actually back in expansion. And that means that output and new orders are actually rising, firms are rehiring, and there's also inventories that are being rebuilt. But having said that, because our mood is actually measured optimism, one of the key things there that is shown by the Corruption Perception Index is confidence. So confidence is the missing multiplier. It really is the real currency. I mean, because without trust, growth stalls, but with it, Philippine industry can actually finally take off.
Yeah.
So confidence is very important in the growth, especially for foreign direct investments.
Very interesting that you said that confidence is the missing multiplier. It really is so important. For years, the Philippines has been judged mainly by power costs, logistics, and labor. But in today's environment, with political noise abound, policy shifts, governance issues making headlines, when global manufacturers choose where to invest, is our political noise, this constant stream of political noise, is that affecting their decisions?
Political noise is a distraction. Uh, businesses, foreign direct investments, businesses actually take a look at countries. So they look at ASEAN. So we're not, it's not just Philippines. Let's say foreign direct investments actually look at ASEAN. What are they looking at? What's important is policy clarity from an investor's point of view. So confidence, and then there's policy clarity, especially in manufacturing. Let me unpack that. Policy clarity, this is actually the beacon for investors to look for. It tells investors what our country is focused on. It tells investors where our opportunities lie and how they can put their money to work for a fair return. Now, how do we compare with our ASEAN neighbors? ASEAN neighbors are deliberately focusing on manufacturing as the anchor for attracting foreign direct investments. So, why manufacturing versus services? It's good to have services, but why manufacturing? Because actually, global FDIs fell by 11%. But FDIs that went into ASEAN went up by 8%. And the figures show $226 billion. Much of the growth is actually concentrated in manufacturing and supply chain development. Why? Because manufacturing actually drives 64% of global growth over the past 50 years. So no country will actually move forward sustainably, growing sustainably without manufacturing. First, we cannot eat ourselves to growth, to sustain growth. That's consumption. We cannot talk ourselves to sustain growth for the future. That's BPL. I mean, AI might wipe that clean off the table. But manufacturing, and it's proven, statistically proven, that manufacturing is the driver of sustained economic growth for any country moving forward. And we have more than, 115 million Filipinos and growing, and
Yeah.
we need to be able to sustain that growth.
Yeah, absolutely, Beth. Manufacturing, supply supply chain development, that is the anchor for FDIs, as you said, because manufacturing investments, that's a long-term play. That's 10, 20 years. And I want to ask you this, with rising political noise, with 2028, that election cycle up ahead and people already posturing for that, is it starting to affect long-term investment decisions? And because when political noise is abound, when it's constant rather, what does it say about what our government is busy with right now?
Well, the fact still remains that businesses are here to stay. Uh, Businesses are here to stay regardless of who sits in Malacanang. So the key here is, we want to support the president whoever the president is, to support the president because he or she is the one that is leading the country. Now, there are programs that are in place, and that needs to move urgently, and it needs to move strategically. So, there's politics everywhere, Thailand, Vietnam, etc. Japan just had their, elections, but it's really, it comes par for the course. But what's important is, are the policies in the country actually working? So, for example, we have the SIPP, which is the Strategic Investment Priorities Plan. It's good. It has over 74 activities across 3 tiers. That's a lot of industries. That's a lot of activities. Now, the point here is we need to be a little bit more focused. For example, Vietnam. Vietnam has an industrial policy that is focused on manufacturing clusters: electronics, semiconductors, automotive, textiles, and green industries. We have the same in the Philippines, but more. We have like 74. So if I were a foreign direct investor looking at ASEAN, for Vietnam, it's very clear. It says, if you want to build factories and supply chains, come here. For the Philippines, it kind of says, we welcome everyone, but then we risk blurring our priorities and dilution. We are diluting our resources even because, this entails tax breaks. So it's good. We have the SIPP, it's good, but perhaps make it another level up to actually have to select some of the strategic industries that would benefit deeper manufacturing growth here locally in the Philippines. So
Yeah.
it's really the signaling, we need to clearly signal, well, if you're going to be investing here in the Philippines, where are you going to be investing?
Yeah. Yeah. Okay. Deeper manufacturing. I also want to talk to you about financing and demand. Bank lending slowed to a 2-year low last December, growing just 9.2%. Our manufacturers, it doesn't seem that they're struggling. I mean, the financing is there. What it looks like is that the demand is soft. What are you seeing, Beth, based on your order books? Is forward demand improving? How is demand like in this environment?
Well, it's still early in the year, but it's really soft demand. It's not tight supply. Loans, it's there. It's not like we can't actually take out loans. But then since we are in this, measured, a bit of a wait and see, you want to be able to have your inventories not be overstocked. So governance clarity, we're looking forward to the infrastructure delivery of the president that says you have to do it already, and the competitiveness reforms, and also structural costs that includes your logistic costs and your power and energy costs. If we can lower that, that would actually have an immediate effect, an immediate relief on manufacturing businesses here in the Philippines.
Yeah, costs from power to logistics remain elevated, and you can't turn on a dime.
Yes, so if you can, that's right, Mikey, you hit it on the nail. If you think about industry and manufacturing, we're like a huge ship. We cannot turn on a dime. So even if, let's say there's, for example, foreign exchange fluctuations, peso fluctuations, if it fluctuates, so long as the volatility actually is minimal. But if small fluctuations in the peso value, we can't really translate that and give it, move it forward to the consumer. So our timeline of lead time in manufacturing, for example, in automotive, the minimum is 4 months. So we can't turn on a dime right away. So, planning takes time.
Yeah.
So fluctuations in foreign exchange, yes, there is an effect, of course. The peso is strong, our exporters, feel the heat and competitiveness. If the peso is weak, manufacturers who actually import inputs have cheaper costs. But then again, we don't transfer that to the consumers right away.
Yeah. You can't. You're a big ship.
So management of the economy is really important.
Yeah, very important. The peso has been flirting with the 60 to the dollar level for a while. So projections are pretty much for that level already. How does this affect your margins and your pricing?
Yeah, margins get squeezed. But particularly energy costs, power, and logistics are immediate structural costs that we can have, reliefs because energy cost is still the single largest input cost for manufacturers.
Yeah.
And we're still among the highest in ASEAN in terms of power
Yeah,
costs.
if the government can bring that down, the benefits would be immediate. Okay,
Yeah.
so what should this administration focus on in the last about 2.5 years?
Immediate relief will be your structural cost, which is your power, energy, and your logistics. But I think in this, last 2 years of the administration, it's a great opportunity to actually signal a very sharp direction to include manufacturing because we cannot afford to lose out to our ASEAN neighbors. With all the things that's happening in tariffs from the US that's increasing, it's actually an opportunity for ASEAN because the FDIs came over in this side of the world
Yeah.
from the other side of the world. But we have to take advantage of that. That's a real big opportunity. So for FDIs, we need to have a sharper direction, lower costs today, sharper direction tomorrow. So that's how we can build resilient local manufacturing.
Yeah, and just to understand the pressure points in the respective sectors, with the government's decrease in spending by 40% last year, we can imagine that it's construction that is taking the biggest hit. So that's the iron and steel. But at the same time, if government spending continues, these are the sectors that are gonna, ricochet. What are your thoughts on what's struggling today and what has the most upside potential in 2026 in terms of sectors?
Mike, you will actually feel that quite immediately when the projects actually start. You can feel that in the growth. And just to say, for every one manufacturing job, it actually creates two additional jobs down the line. So imagine that multiplier effect. So if, for example, all the infrastructure projects that's slated gets done, you can actually feel that quite immediately. Now there are some sectors that's going to be expanded. That's going to be the cement, the steel, etc. But there's one industry sector that might surprise us. That's the pharmaceutical and the health center because I think the DOH is already having some reforms and the Tatak Pinoy is actually helping out on this one where you have purchase preference using local manufactured products. So this would help our pharma industry locally.
Yeah, and Beth, really quickly, if confidence doesn't improve by the first half of this year, what are the economic risks we're facing?
Oh no. we we actually need, but to be fair, PMI actually did jump to 52.9.
Yeah,
So
January
that
and,
actually
and
shows
December.
that yes, that it actually is. We're moving forward with confidence, and we want to sustain that. It really is so important. And to be fair, the our government actually is doing its best, to do something about that in confidence. So, for example, the Bureau of Customs, Ariel Nepomuceno, is actually doing a good job right now in terms of anti-smuggling efforts. Both the BIR and the BOC under the DOF now. Secretary Go is actually...
Yeah. I wanted to get at that. Which public officials or economic managers or people in government, period, have the most trust right now from FPI?
Great question. And they're the ones that's actually lifting the confidence. DPWH Secretary Vince Dizon, DOF Secretary Frederick Go, BOC Ariel Nepomuceno, BIR Commissioner Mendoza, Arsenio Balisacan, and to a certain extent also the SEC Chair, Attorney Francis Lim. So I think these are some of the stars of under the administration of PBBM that's actually working, focused, and doing their job, and that lends to confidence in the business sector is important.
Yeah, leadership, confidence, so important, and understanding the economic problems so we can face them head on. I want to ask you this, Beth. If you could get people from the private sector, as we look to leadership for 2028, if we could get more people from the private sector, well, first off, what's keeping people from the private sector to do government service, to get into government service, and who among them would you like to see step up to lead the nation in whatever way?
Oh, wow. I have two people in mind that's like a wish. One is MVP and the other is RSA.
Okay, very interesting. Okay, Beth.
And Manny Pangilinan.
All right, and before we go, what keeps people from the private sector? These great people from the private sector with amazing track records. What do you think, in your perspective, what's keeping them from jumping the fence and going to the other side with government work?
Yeah, I think one is maybe divestment requirements, but really, I think if you are outside of the government, you might have more leeway and opportunities to do the things that you can. If you're in the government, there's a lot of colatilia inside the government, and it might hamper you wanting to do what needs to be done without stepping on a lot of toes.
Yeah.
So perhaps, maybe that's why a lot of the people in the private sector try to do the best they can to help the government outside of being inside the government.
Yeah. All right. Well, that's all the time we have for this discussion. Beth Lee of FPI, thank you so much for being with us this morning and for sharing your insights.
My pleasure. Thank you. Thanks, Maiki.
We're taking a break. Please stay with us. More stories when Business 360 returns. Welcome back. The controversial 2023 Rolls-Royce Cullinan, once linked to the Discaya family, has found a new owner. Baguio businessman Pio Velasco, owner of the Igorot Stone Kingdom, has acquired the luxury SUV for about 29 million pesos. Velasco says that the purchase is both a collector's investment and an effort to preserve what he calls a piece of contemporary Philippine history. He has yet to decide whether the vehicle will be publicly displayed, but says his main goal is to keep it from being destroyed. The sale highlights how high-end luxury assets with public controversy or historical backstory can still command significant value in the secondary market. Church and civil society groups are set to hold a third trillion peso march at the EDSA Shrine on February 25th, marking the 40th anniversary of the People Power Revolution. Organized by Caritas Philippines, the event will focus on remembering the past, acting in the present, and working toward the future. Lead-up activities include a protest scheduled for February 23rd. Organizers say they will not support calls for the resignation of President Marcos or Vice President Sara Duterte, but will exhaust all means to hold officials accountable amid impeachment complaints filed at the House. The main program will feature a prayer march, a gathering at the People Power Monument, and a mass at EDSA Shrine, with 86 dioceses nationwide expected to hold similar events. Former Senate President Franklin Drilon says Vice President Sara Duterte's impeachment trial could have major implications for her 2028 presidential prospects and add new political uncertainty for businesses and investors watching policy direction. Speaking on BNC's agenda, Drilon contrasted how Senate leaders have handled the process. He said then Senate President Francis Escudero, whom he described as allied with Duterte, delayed hearings despite the House's forthwith referral of the complaint. Meanwhile, Senate President Vicente Soto III has signaled he would set hearings immediately once an impeachment complaint formally reaches the chamber. For the business community, the timeline and the outcome of the trial will shape investor sentiment and the broader political landscape heading into the 2028 election cycle.
Unang-una, si Chief Escudero ay kilalang kakampi ng Vice President. Kaya nung ni-refer ng House ang impeachment complaint, hindi po agad hinir, notwithstanding yung use of forthwith. Dahilan po yung trial on an impeachment case, talaga pong makakabigat yun sa kampanya ng Vice President Sara Duterte. Kaya po sa akin, logically as a part of the campaign strategy, dinilay po or naghanap ng paraan para hindi agad madinig. At hindi nga nadinig dahil ang impeachment dahil sa Supreme Court. Ngayon po, kung si Senator Soto naman ay nagpahayag na pag dumating yung impeachment complaint sa Senado, agad-agad isa-set for hearing. So maliwanag po na ang 2028 ay malaki ang influensya doon po dito sa desisyon kung matutuloy ba ang trial o hindi.
As Valentine's Day approaches, the Cybercrime Investigation and Coordinating Center is warning of a surge in love scams now using artificial intelligence. On BNC's Politico Nightly, CICC Executive Director Renato Paraiso said that scammers are harvesting personal information from social media to build highly targeted fake profiles designed to match their victims. Preferences listing red flags to watch out for.
So, ang mga red flags usually naman pag when it pertains to love scams, unang-una ho, too good to be true. Ibig sabihin, sobrang kilala ko na ng tao because AI was used to profile you. Alam nila kung ano yung gusto mo. Kung gusto mo mestizo, gusto mo yung medyo matangkad. So that's what they'll portray. Second po is parang nagmamadali tsaka may pressure. Sabihin nila, nanghihingi na ng pera kasi kailangan ko na pumunta sa'yo or kailangan na natin magpakasal kagad. Third is, it's time-bound. Parang halimbawa, if you're not going to entertain me, bahala ka. Baka hindi na ako makapunta sa'yo or baka makulong na ako dito. And lastly siguro na kailangan natin tandaan sa love scam, ang sinabi ho ng aking paboritong philosopher na si Jennifer Lopez, love don't cost a thing.
Authorities are urging the public to limit sharing personal details online and report suspicious accounts as AI-driven scams become more sophisticated. Now, the United States is pushing for a sharp increase in Venezuela's oil and energy output this year, a move that could influence global oil prices and, in turn, fuel costs here in the Philippines. U.S. Energy Secretary Chris Wright is in Caracas for high-level talks aimed at reviving Venezuela's oil industry and boosting production. Washington is working with Venezuelan officials and global energy firms to drive a dramatic increase in oil, gas, and power output as part of a broader push to attract foreign investment and reshape global energy supply. The initiative follows a $2 billion oil deal and new policy moves to open Venezuela's energy sector to private and international players. Venezuela holds the world's largest oil reserves, but has seen output collapse over the years due to sanctions and underinvestment, leaving significant room for supply to expand if production recovers. For the Philippines, a major oil importer, any meaningful increase in global supply could help ease fuel cost pressures, influence inflation, and affect transport and power prices in the months ahead.
We believe, in fact, I can say, I think we know that working together, the people of Venezuela and the people of the United States, this year, we can drive a dramatic increase in Venezuelan oil production, in Venezuelan natural gas production, in Venezuelan electricity production, and most importantly of all of these are to increase the job opportunities, the wages, and the quality of life for all of the Venezuelans across the country. And by doing that, it will also enormously benefit the United States and the Western Hemisphere and the future partnership for all of us.
The Council of Europe lifts diplomatic immunity for former Secretary General Thorbjørn Jagland amid a Norwegian investigation into his alleged ties to Jeffrey Epstein, a case now drawing global attention to governance and accountability in international institutions. Now, Norwegian police have opened a probe into possible aggravated corruption. The council says removing Jagland's immunity will allow the justice system to do its work and give him the chance to defend himself. Reports citing newly released U.S. documents say Jagland had extensive contact with Epstein, including stays at his properties in New York and Paris, and a planned visit to Epstein's private island. Jagland denies any criminal liability and says he will fully cooperate with authorities. The Council of Europe has also ordered an internal inquiry and a review of its governance practices. For global investors and institutions, the case underscores growing scrutiny over ethics, transparency, and governance standards in international organizations. France is urging citizens to cut back on meat under a new government strategy linking diet, public health, and climate policy, a shift that could also reshape global food trade. The National Strategy for Food, Nutrition, and Climate, which runs through 2030, promotes more fruits, vegetables, and whole grains while calling for limited meat intake and a reduction in imported meat. Food production accounts for about 1/4 of France's carbon emissions, with meat responsible for nearly 2/3 of that. Farm groups warn such moves could threaten livelihoods and disrupt the agriculture sector. The guidelines come just days before France's annual agricultural fair, where farmers are already raising concerns over trade and imports. For exporters like the Philippines, a shift in European consumption and import policy could influence demand for processed food, agri-products, and global supply chains in the years ahead. BMW is recalling hundreds of thousands of vehicles worldwide over a potential fire risk linked to engine starters, highlighting ongoing quality and supply chain risk across the global auto industry. The automaker says a mid-six-figure number of cars across 16 models built between July 2020 and July 2022 may be affected due to excessive wear in the starter's electromagnet. BMW warns that a short circuit cannot be ruled out, which could lead to overheating and, in extreme cases, a vehicle fire while driving. Owners are being advised not to leave engines running unattended after starting their vehicles. The company says it will contact owners to arrange part replacements and adds that the recall is expected to have little, if any, impact on earnings. For global manufacturers, the recall underscores how defects in a single component can trigger costly repairs, brand risks, and supply chain scrutiny across multiple markets. Elsewhere, Dubai International Airport hit a record 95.2 million passengers in 2025, pushing the world's busiest international hub close to full capacity as global travel demand surges. Traffic rose 3.1% last year, with a monthly record of 8.7 million travelers in December. The airport remains the busiest in the world for international passenger traffic. Officials now expect passenger numbers to climb nearly 100 million this year and reach 115 million before operations shift to the $35 billion Al Maktoum International Airport, set for completion in 2032. The new hub is designed to handle 150 million passengers a year, with long-term plans to expand capacity to as much as 260 million. For the Philippines, a major source of overseas travelers and workers, the surge in Dubai traffic signals stronger global travel flows and intensifying competition among major aviation hubs. Up next, global markets, what's moving and why. This is Business 360. Welcome back. Let's take a look at how global markets performed overnight. Wall Street closed lower with the S&P 500 ending near flat as stronger than expected U.S. jobs data eased recession fears but raised expectations the Federal Reserve may move more cautiously on interest rate cuts.
Stocks seem to have a mixed reaction to the jobs report. What generally should be heralded as great news and green on all the screens has been more of a mixed reception. Certainly, a good jobs report doesn't overcome the massive AI narrative that's taken markets this week, and whether or not individual sectors of the economy are at threat from a few bots that could take them down in a couple of weeks. Of course, I think investors are smart to take a step back and recognize that innovation has hit the marketplace time and time again, and somehow we survive. So perhaps this short-term volatility, a lot of it fueled by a lot of leverage, is really just that, short-term volatility, and to look ahead to the great promise of AI and to the fact that markets in general find a way through.
The Dow Jones fell 0.3%, the S&P 500 flat, and the Nasdaq lower by 0.2%. Now, European markets ended mixed. The UK's FTSE 100 up by 1.1%. Germany's DAX lower by 0.5%, and France's CAC 40 lower by 0.2%. Now, Dutch brewing giant Heineken, one of the world's largest beer makers and a major global consumer brand company, is cutting up to 6,000 jobs worldwide over the next 2 years as it responds to weaker demand and challenging market conditions. The company owns more than 300 brands globally and has a strong presence across Asia, including here in the Philippines. CEO Dolf van den Brink says Heineken is focusing on productivity and cost efficiency as he prepares to step down, aiming to leave the company in a stronger position. Global beer volumes fell 2.4% in 2025, with Europe and the Americas seeing the biggest declines. Annual sales also dropped to 34.4 billion euros. For the Philippines, a key growth market in Southeast Asia, the cuts highlight how global brewers are tightening costs while shifting focus on faster-growing consumer markets. Heineken still forecasts organic operating profit growth of 2 to 6% in 2026 after a 4.4% rise last year. Now, two co-founders of Elon Musk's artificial intelligence firm xAI are stepping down. The latest shakeup inside one of the world's most closely watched AI startups. Tony Wu and Jimmy Ba, who helped launch xAI with Musk less than 3 years ago, announced their departures in posts on X. Their exit leaves the company with only about half of its original 12 co-founders still in place. This amid reports of internal pressure to accelerate model development and catch up with rivals like OpenAI and Anthropic. The leadership changes come just days after SpaceX said it plans to acquire xAI in a deal that could create a $1.25 trillion tech group with an IPO targeted later this year. For global business, the shakeup highlights intensifying competition in artificial intelligence, with talent, capital, and scale now key battlegrounds in the race to dominate the next wave of technology. Now let's check on how Asian markets are doing this Thursday morning. Right now, the Nikkei 225 is flat with a downward bias less than 0.1%. Hong Kong's Hang Seng Index in the red as well, lower by 0.9%. Shanghai's Composite going the other way, but flat with a very slight upward bias. Singapore's Straits Times Index, on the other hand, is in the green, higher by 0.6%. Here at home, taking a look at the PSE Index, this as of 10:22, the main gauge is down by 0.4% to 64.71. Volume is at 179 million shares, valued at 1.13 billion pesos. Market breadth is bearish, with 72 decliners against 54 advancers, while 71 stocks are unchanged. On the currency front, the peso opened at 58.18 to the dollar from its previous close of 58.29. On the corporate front, C-led BDO, Unibank, and Ramon Ang-led Bank of Commerce are among the top corporate taxpayers in Mandaluyong City, highlighting the crucial role of large corporations in supporting local economies. The recognition was led by Mayor Menchi Avalos during the city's Liberation and Cityhood Anniversary celebration, citing strong corporate contributions to local revenues. Other major firms cited include PLDT-backed Maya Philippines and the Campos Families United Laboratories, key players in banking, fintech, and healthcare. For the broader economy, corporate tax payments from major firms remain a key funding source for infrastructure, public services, and local development, underlying how business performance directly supports government spending and economic growth nationwide. On another front, Japanese-owned Yusen Logistics, a global freight and supply chain company with operations here in the country, is shifting its head office in Parañaque to 100% renewable energy as part of its global climate targets. The company will source all of its electricity from ASEAN Renewable Energy Solutions, a unit of the Ayala Group's energy platform ASEAN. The move is part of Yusen's plan to cut greenhouse gas emissions by 45% by 2030 from 2022 levels and reach net zero emissions by 2050 across its operations. The transition will be done through the government's Green Energy Option program, which allows large businesses to buy electricity directly from licensed renewable energy suppliers. ASEAN Renewable Energy Solutions says more companies in the Philippines are now shifting to clean power to meet ESG targets and manage long-term energy costs. The firm currently holds about 57% of the Green Energy Option program market. For the Philippines, the shift signals growing demand for renewable energy from multinational firms, a trend seen as critical in attracting foreign investment, lowering carbon emissions, and strengthening the country's position in global green supply chains. Now, fast food giant Jollibee Foods Corporation is powering its Philippine commissaries with 99% renewable energy in a major sustainability push across its local operations. The company has partnered with Lopez-led First Gen Corporation to supply about 11 megawatts of electricity from geothermal plants in Bicol, with the remaining power sourced from the grid. The shift is expected to cut greenhouse gas emissions by more than 70% across covered sites, supporting Jollibee's push for more sustainable and reliable operations. The move signals how major local corporations are increasingly turning to renewable energy to manage power costs, meet ESG targets, and strengthen supply chains as global investors and consumers place greater focus on sustainability. And that's it for Business 360. I'm Maiki Oreta. Thank you for joining us, and keep it here on DNC, the Bilyonaryo News Channel.